Hello, my dear students. Welcome, everyone. The next chapter, what we are going to discuss is lease accounting. So, the name of the chapter is lease accounting, which is accounting standard 19. So, there is a standard called accounting standard 19, which exclusively deals with leases and its accounting treatment. So, sir, what is the content of this standard? What we are going to discuss in this standard? See, when you take any asset on lease is quite common, right? So suppose, for example, a business enterprise may take any plant and machinery as lease, or may take any land and building for lease. So there are different assets. So business enterprises will take it on lease basis, on rental basis. When any asset is taken on rental basis, so what is the accounting treatment we will do for that rental agreement or for that lease agreement? That is what this chapter is all about. And we have a separate accounting standard 19. So that accounting standard, which is given by Institute of Chartered Accountants of India, exclusively deals with the accounting treatment of leases, and we are going to learn that standard in this chapter. So first of all, what we are going to learn in this chapter? What are the things we are going to cover in this chapter? Let us see. First, objective of the standard. See why this standard came. What is the basic objective of the standard AS 19? Second, scope of the standard. So whether AS 19 is going to cover all kinds of leases. Is there any limitations? Next, the most important part of this standard is definitions. Definitions. Sir, AS 19 involves a lot of technical terms. So I think if you want to understand this chapter, you should completely understand the technical terms and its meaning. What is lease? What is inception of lease? What is minimum lease payment? What is residual value? What is guaranteed residual value? What is unguaranteed residual value? What is finance lease? What is operating lease? And unearned finance income, gross investment, net investment. See, these are the few terms which they have used in this standard. So unless and until you know the meaning of these terms, I think it is very difficult to master this standard. So the major focus of this standard is focus on the definitions part. Majority of the standard is all about definitions. So if you know the definitions, then accounting treatment and calculations becomes very easy in this standard. So definitions, very, very important. I think there are about 12 to 13 definitions is there approximately. So all those definitions are very, very important. So we have to learn all those definitions. Now once we learn the definitions, the next thing is types of lease. Types of lease. So whenever any business enterprises enter into any lease agreement, so how many types of leases are there? Basically they say there are two types of leases: finance lease, operating lease. So that classification is actually given by accounting standard 19. So we have to discuss types of lease, because the accounting treatment of leases is depends upon the type of lease. So what type of lease it is, depending upon that we have to do the accounting treatment. That's why classification of the lease is very, very important before starting the accounting treatment. Now that classification is also given by accounting standard 19. And then once we learn the types of lease, the next thing is accounting treatment. Accounting for leases. So accounting for leases means, suppose if it is a finance lease, what is the accounting treatment? If it is an operating lease, what is the accounting treatment? Now in accounting for leases, so there are lessor books and lessee books. Lessee books. So lessor books as well as lessee books. So in both the books, sir, both lessor as well as lessee, we have to learn the accounting treatment. Sir, who is lessor? The owner of the property. The person who gives asset on lease basis is called lessor. Lessee is the person who takes the asset on lease basis. Business enterprise, nothing but. It is like, for example, so I have taken a house for rent. So I am not the owner. The person on from whom I have taken the rent, that person is called lessor, and the tenant is called lessee. In simple words. Now, once we learn the accounting for leases in lessor books, lessee books, the next topic is sale and leaseback transactions. Sale and leaseback transactions. See, sometimes what happens is we will sell the asset, and the same asset we will take it on lease basis. That is called sale and leaseback transactions. Suppose I have with me one plant and machinery. I sold that plant and machinery upon the agreement that the same plant and machinery I will take it on lease basis. So that is called sale and leaseback transactions. Whenever any asset is taken on lease basis under sale and leaseback transactions, what is the accounting treatment we need to do in the books of lessor as well as lessee? So that is what we are going to learn. So basically these are the concepts what we are going to cover in this standard. And of course we have certain disclosure requirements, what points we need to disclose relating to leases in the financial statements. So that is disclosures. So that is also we need to discuss. Actually disclosures are not that much important. So usually when they ask a question from this standard, I mean this chapter, they are going to ask one practical question. Okay. So this is what we are going to cover in this standard. Basically these are the things we are going to discuss. Okay. Now let us start our discussion first with the what is lease. Because see, without understanding what is lease, so we can't discuss further. So in definitions, the first thing what we need to discuss is the lease definition. So first understand what is lease. What is lease? See, simple sir. See, lease is an agreement. Under that agreement, the owner of the property gives his asset for use for a certain period of time to a person, and for a consideration in the form of rent, lease rentals. So a lease is a agreement between the parties where the owner of the property gives the right to use this asset to the other person for some period of time upon payment of some rentals. So basically this is what lease. So one party give away his asset to other party, that so you use this asset. Now as a consideration you pay me this much periodically, and I am giving this right to you for a fixed period. For example 5 years. So I am giving a right to use my asset for 5 years. Now for that every year you pay me 5 lakh rupees. So this is basically lease. So lease is basically what? An agreement between 2 parties. Basically there are 2 parties in lease. Sir, who are the parties? The owner, the tenant. That means the lessor, owner is called lessor, and the lessee, the tenant of the property, the person who takes the asset on lease basis. So lease is an agreement between two parties where one party gives right to use the asset, right to use the asset. So the owner of the property is giving you the right to use the asset for a period, for a fixed period, for a fixed period. This we call it as lease term. Lease term. For a consideration. For a consideration. What is this consideration? Lease rentals. Lease rentals. For a consideration means lease rentals. Okay. So basically, this is what the lease is. So the lease is an agreement. First understand there is an agreement. So what is agreement? Terms and conditions, right? So that means whenever I am giving my property to other person for use, all the conditions relating to it I will write. So both the parties will accept those conditions and that will be registered. So that is called agreement, terms and conditions. So lease is an agreement between two parties. Who are the two parties? Lessor as well as lessee. Owner and tenant. For what? Right to use the asset. My asset you are going to use for a fixed period. See, I am giving you this right for this period only. Lease term. For a consideration, lease rentals. So agreement, two parties, right to use the asset, lease terms, lease rentals. Basically, this is what the lease is all about. So what is the meaning of the lease? See here. See, I am going by the study material. So what is given in the study material? You see, lease is an agreement. I told you, na, lease is an agreement whereby the lessor means the owner, conveys to the lessee, the tenant, in return for payment or series of payments, the right to use an asset. See here, the right to use an asset for an agreed period of time. See here, for a fixed period of time, agreed period, both the parties, for a consideration, that is called lease rentals, return for a payment or series of payment. So what is lease? Lease is an agreement whereby lessor conveys to the lessee on in return for payment or series of payments, the right to use the asset for an agreed period of time. So therefore, the important thing is there is an agreement and there are two parties, and one party gives to the other party the right to use the asset, and that too for a fixed period of time, agreed period of time, and for a consideration. So basically these are the 5 things which is there in the lease. Okay. So see, this is very common. You see in daily life also. So we also see, we will take house property for rental basis. Now these days we are taking even cars for rental basis. So we are taking on daily walk of life also, we are taking so many assets on rental basis. Now see, but this standard is going to cover, see, leases which is taken by the business enterprises, the assets which they have taken. Okay. So we understood what is lease. Now we understood, we will start with the basic objectives of the standard. So first we understood what is lease. Okay. One asset we have taken on lease basis. Now let us start with the objective of the standard. Once we understood the lease, the next thing is objective. Sir, why they have come up with a separate standard for this? See, the basic object of this standard is to provide accounting treatment of leases in the books of lessor as well as lessee. So lessor books as well as lessee books, what is the accounting principles they follow whenever they have taken any asset on lease basis? So to prescribe that accounting treatment, this standard basically came into the existence to provide the principles for accounting. So to provide what? To provide principles for accounting of what? Leases. To provide principles for accounting of leases. In whose books? Lessor books as well as lessee books. So lessor books, lessee books. What is the accounting treatment we need to do? To provide the principles for accounting, this standard came into existence. Okay. So to put it simply, very simple object of the accounting standard 19, sir. So the object of AS 19 is to prescribe appropriate accounting policies and disclosures in relation to finance leases and operate leases, both lessees as well as lessors. Told you, no? Lessor books, lessee books. What is the accounting treatment? To provide principles for accounting of leases. So what accounting policies a company follow or a business enterprises follow whenever they taken any asset on lease basis, and what disclosures they need to make in the financial statements, so in respect of leases. So that is what this standard is all about, to provide the accounting policies as well as disclosure requirements relating to what? Relating to leases. In whose books? The parties books. Who are the parties which is involved in leases? Lessor as well as lessee. So this is the object of this standard. So you understood now why they brought AS 19, to provide or to guide the lessor and lessee. See, these are the policies you follow. These are the disclosures you have to make in the financial statements whenever you enter any lease. This is the how accounting treatment you have to done. So to provide that, this standard came into existence. Okay. So we completed the objective of this standard. Now let us discuss the scope of the standard. Very important. Maybe MCQ can be asked from scope of the standard. Scope of the standard. Sir, what is generally scope? Scope means the area of coverage. See, every standard have its own limitations. The standard is drafted in such a way that it is applicable only to certain enterprises or certain situations, certain circumstances. You can't universally or you can't apply one single standard in all circumstances. So every standard has its own limitations. And that too, one more point I usually told in so many places, that when there is a specific standard, specific accounting standard versus general accounting standard, so when there is a specific accounting standard, always give preference to specific accounting standard. Suppose if there is no specific accounting standard, then follow general accounting standard. Now for leases, AS 19 is the specific accounting standard. So therefore you follow AS 19. No need to follow general accounting standard. Okay. So let us discuss the scope of this standard, sir. See, AS 19 should be applied in accounting for all leases other than, see here, other than. So all leases it is applicable, but other than, they have given certain exceptions. In fact, there are 3 exceptions to this standard. One is any agreement for use of land. See, lease agreements to use lands. So lease agreements for use of land. So therefore, suppose a business enterprise has taken any land on lease basis, whether this standard is applicable? Answer is no, this standard is not applicable. So lease agreements to use lands are not covered under this standard. This is one exception. And any lease agreements to explore for or use natural resources such as oil, gas, timber, metals, other mineral rights. For example, Reliance Industries Limited has taken taken a lease agreement from Government of India for exploration of natural resources from the sea. So like they want to extract oil, gas, or they have taken a right to explore the timber in the forest. Okay, or metals they want to excavate, explore. So extract metals from the earth or other mineral rights, any kind of resources which is given by nature. So other non-regenerative resources, that means they cannot be generated, only nature will give, so we have to extract. So any lease agreement entered by business enterprise for exploring or use of natural resources, so maybe oil, gas, timber, metals and other mineral rights, this standard is not applicable. See, why, sir, you may ask, sir, why AS 19 is not applicable in these situations? See, I told you every standard has its own limitations. Maybe for any agreement for use of explore or use of natural resources such as oil, gas, timber, metals and other mineral rights, there are certain other guidelines, there are certain other industrial standards, so that's why the standard is not applicable. So when there is a specific standard, go for that. So therefore, maybe for lease agreements for exploring natural resources such as oil, gas, timber, metals and other mineral rights, maybe we have some other guiding principles, so that's why the standard is not applicable. Or see, when they have drafting the standard, they know that we are drafting this standard based on these parameters. Now if anything is not based on these parameters, obviously the standard is not applicable. So that's why, so for any agreement, any lease agreement for exploration or use of natural resources such as oil, gas, timber, metals and other mineral rights, this standard is not applicable. And one more thing is licensing agreements for items such as motion picture films, any video recordings, plays, manuscripts, patents and copyrights. So any lease agreements for items such as motion picture films, movies, any lease agreements for movies, cinemas. So any, lease agreements entered for taking lease of any motion picture films, cinema or video recordings or plays or any manuscripts, patents, copyrights. See, plays, manuscripts. So manuscripts means the original, what is that? The books which is written by the original author, the manuscripts. For example, the theorems which is written by Srinivas Ramanujan, Albert Einstein theories. So original. So whatever the original, things, original drawings, original paintings, manuscripts, we may call them as, or some kind of very precious things, intangible items. Okay. So any lease agreement for motion picture films, video recordings, plays, manuscripts, patents, copyrights. Suppose for example, so there is a author, suppose for example Chetan Bhagat is there. Now Chetan Bhagat has written one book. Okay. Now there is a publishing house, suppose for example Himalaya Publishing House. Now this Himalaya Publishing House, so this Chetan Bhagat has given a copyright to Himalaya Publishing House. Now any agreement between them, lease agreement for copyrights, so that is also not covered under this standard. So Chetan Bhagat has given a copyright agreement, has entered a lease agreement for copyrights with the Himalayan publications. Now this standard is not applicable. So any intellectual property rights, any agreements relating to intellectual property rights, any agreement for lease, movies, video recordings, plays, manuscripts, patents, copyrights, formula patents. For example, one company, suppose Dr. Reddy Pharmaceuticals Limited has developed one formula medicine. Now they have given this medicine for other company, so as a lease, a licensing agreement. The licensing agreement, they have given a license to other companies to produce this in return for some consideration. So this standard is not applicable. So for intangible assets, maybe there are separate guiding principles. Maybe the standard is not suitable. The principles of this standard is not going to cover the aspects of those intangible assets. That's why the standard is not applicable. So any licensing agreement. So for example, motion picture films. So for example, one production company has produced one movie. Okay. Now that movie they have given to a television channel on licensing agreement. They have given a license to the television channel broadcast this cinema. For example, see, for example, Triple R, movie Triple R. Now this triple R movie produced by DVV company. Now this DVV company may give this triple R to broadcast to G TVs, G group. Now any leasing licensing agreement between the DVV and ZTV, so that this standard is not applicable. Video recordings. So for example, I have recorded something, so any event or any I mean, maybe for example, I have photographed some wildlife animals. Now those photographs I have given to Discovery Channel. So licensing agreement, video recordings. So maybe I have shoot something which is, so which is very demanding, which is very I mean, these photographers, wildlife photographers, or maybe event bloggers will be there na. So they will go to different places and they will shoot different things. Maybe they give license to the television channels, internet, YouTube, so that to broadcast on taking some amount. So those licensing agreements are also not covered under this standard. Any place, so maybe any kind of a drama, the script of the drama, or manuscripts, books of original writings. So maybe biographies, maybe any theorems which is written by the famous scientists in their own handwriting, original things, manuscripts. So any patents, any copyrights. So see, all these, to put it simply, what is that? Intellectual property rights, IPR. Now, IPRs, giving IPRs under a license is not covered under this standard. So this is the scope of this standard. So understand, AS 19 is applicable for all kind of leases except three things. What are the three things? Any agreement for use of land, this standard is not applicable. Second thing is any lease agreements to explore or use of natural resources such as oil, gas, timber, metals and other mineral rights. And any lease agreements for items such as, any licensing agreements for items such as motion picture films, video recordings, manuscripts, patents, copyrights. So this standard is not applicable. Okay. So this is the scope of the standard. Scope of the standard. So scope, I think you have to remember, sir, all kind of leases are covered except these three things. So any lease agreement for use of land, so land lease agreement not covered under this standard. Similarly, any lease agreements for exploring natural resources, so natural resources extraction using like oil, gas, timber, metals, this standard is not applicable. And also any agreement, any licensing agreement for IPRs, intellectual property rights, like any patents, copyrights, trademark, any, what is that, licensing agreements for motion picture films, manuscripts. So for all these things, this standard is not applicable. This standard is not applicable. For remaining types of leases, this standard is very much applicable. Now next. So let us move to the next topic, which is very, very important topic, the definitions part. So the third part is definitions. Sir, in this standard, there are quite a few definitions, sir. So we have to be very careful, because I told you to learn the accounting treatment of leases, there are some technical words. You should understand the meaning of those technical words. Okay. Now, so we know there is an asset. Suppose this is one asset. Suppose this is one plant and machinery. Now, the lessor, the owner of this asset, he gives this asset to lessee. Okay. For that, lessee will pay some consideration in the form of rentals, lease rentals. Lease rentals. And lessor gives this asset to lessee for use for a certain period of time. Maybe, for example, lease term. So he gives the right to use this asset for some agreed period of time, maybe 7 years. So basically this is what the lease is. So entire thing is under one agreement. So there is a agreement and there is a lessor and lessee, two parties, and there is a asset, and this asset is given for lease for 7 years, and for that in consideration some amount will be received by lessor from lessee. See, this is basically leases. Now we have to concentrate on accounting in the books of lessor as well as lessee. Now see, what are the important definitions we are going to cover in this standard. So that is what we are going to discuss in this standard. Sir, see sir, first important definitions we have covered lease. Okay. Next, there are certain definitions. So this is the first definition. And second, what is non-cancelable lease? What is inception of lease? And what is lease term? What is minimum lease payment? And what is economic life, useful life? What is residual value? What is guaranteed residual value? And what is unguaranteed residual value? What is gross investment in lease? What is unearned finance income? What is net investment? What is interest rate implicit in the lease? 14. And contingent rent, 15. See this, how many technical words are there. So we have to learn all these things, otherwise you are unable to understand this standard, sir. So first, lease, sir. What is lease? So first of all, see, I have not covered here the finance lease, operating lease, because in types of lease we are going to discuss it. So that's why we are not discussing this as a part of definitions. So definitions, what are the definitions we have? First, lease. What is lease? So this is the first definition, and we already discussed. Just now also I repeated. And the second definition is inception of non-cancelable lease. This is also one important definition. Non-cancelable lease. Non-cancelable lease. Okay. And the third definition is, I think, inception of the lease. Inception of lease. Inception of the lease. This is one definition. So three definitions now. Fourth definition is lease term. So this is also, you need to understand what is lease term. And then minimum lease payment. This is one definition, very, very important. Minimum lease payments, which is helps in accounting treatment also. So minimum lease payments. Minimum lease payments. So we call it as MLP, minimum lease payments. We call it as minimum MLP. Next, economic life. So next thing is economic life. Economic life. What is economic life? And next, what is useful life? Useful life. So economic life, useful life. This is seventh definition. Now eighth definition is residual value. Residual value. What is residual value? And then ninth definition is guaranteed residual value. Guaranteed residual value. Guaranteed residual value. Guaranteed residual value. That is GRV. Guaranteed residual value. So guaranteed residual value is the ninth one. Next, 10th one, unguaranteed residual value. So unguaranteed residual value. Unguaranteed residual value. So unguaranteed residual value. Unguaranteed residual value. UGRV. Next, one more definition is gross investment. Gross investment. gross investment. So gross investment in the lease, gross investment in the lease. So GI. Okay, this is one definition. And then the 12th definition is unearned finance income. Unearned finance income. Unearned finance income. What is this unearned finance income? So UFI, unearned finance income. And then 13th definition is net investment. So this is one more definition we need to cover, is net investment. And then 14th definition So 14th definition, sir. Interest rate implicit in the lease. Interest rate implicit in lease. Interest rate implicit in the lease. This is one definition, sir. Next, contingent rent. Contingent rent. So basically these are the definitions what we are going to cover in this standard. In fact, these are the minimum. There are few others also, one or two. But anyway, these 15 are, I think, very, very important. Out of this, so at least 5 or 6 are most important. See, we completed what is lease. Now we need to discuss what is non-cancelable lease. What is inception of lease? What is lease term? What is MLP, minimum lease payment? What is economic life? What is useful life? What is residual value? What is guaranteed residual value? What is unguaranteed residual value? What is gross investment in the lease? What is unearned finance income? What is net investment? What is interest rate implicit in the lease? What is contingent rent? So one by one we are going to discuss. Now the next thing what we are going to discuss is non-cancelable leases. So what is the thing we are going to discuss, sir? The second definition, very, very important definition. Non-cancelable leases. Non-cancelable leases. So what we are going to, discuss is the definitions. In the definitions, there are 15 definitions is there approximately. Out of that, first one, what is lease, we have discussed. Now we need to discuss other definitions. In that, the first one is non-cancelable lease. Now let us discuss non-cancelable lease. Now see this definition, sir. Non-cancelable lease. So this is the definition we have to learn. So very, very important definitions. These are all. Please focus. The definition must be a definition. It should not be changed. So as it is, whatever they have defined, we have to learn it. Most of the times what happens with the definition is, so people will, reduce it to their language, reduce the definition to their language for understandability, which is okay. But see, the essence of the definition must not be changed. So therefore, whatever the wordings which is used in the definition, you have to read it once. So let us see this definition, what they have given. First of all, non-cancelable lease. Okay, sir, why we are learning this definition? See, this standard is applicable only for non-cancelable leases. This standard is not applicable for cancelable leases. The lease which can be cancelled any point of time. So for those types of leases, cancelable leases, this standard is not applicable. So therefore, first you should understand generally what is a non-cancelable lease. Non-cancelable lease means once a lease is entered now, which cannot be cancelled, right? That is non-cancelable lease. But this standard defines non-cancellable lease as non-cancellable lease means a lease which is cancelable, but only in 4 situations. In these 4 situations, cancelable, but still we have to consider it as a non-cancelable lease. See here, a non-cancelable lease is a lease that is cancelable only. Generally, non-cancelable lease means which cannot be cancelled, but they are saying that a non-cancelable lease is a lease that is cancelable only because of the following reasons. So because of this following reason, if it is cancelable, still we have to consider it as a non-cancelable lease and we have to apply accounting standard 19. Sir, what are the 4 situations? First, upon the occurrence of some remote contingency. Upon the occurrence of some remote contingency. Upon the occurrence of some remote contingency. See, occurrence of remote contingency. Sir, what is this occurrence of remote contingency? Remote means rare. Contingency means something which may happen or may not happen. So, happen, for example, contingencies, which is not in our control. So on occurrence of some unfortunate things or occurrence of some things which we have not expected, then lease can be cancelable. So upon occurrence of some remote contingency, a lease can be cancelable. Even though the lease is cancelable, still it is considered as non-cancelable and AS 19 is applicable. For example, sir, for example, Mr. A is there. He is having one hotel. Okay, he is the owner and this is the hotel. Now this hotel, he has given lease to Mr. B. Now he taken this hotel for lease. Now suppose what happened is, after the lease has taken, suppose there is a fire in the hotel which destroyed the entire electrical fitting system in the hotel. Now for a hotel, the kitchen, the electric system, everything is ambience, everything is very, very important. But what happened is a fire occurred. Now in that fire, the property, the electrical fittings, the furniture, everything got destroyed. Now see, happening of a remote contingency. Now what Mr. B can do? He can cancel the lease now. Now this kind of a lease, which can be cancelable only on the occurrence of remote contingency, still it is considered as non-cancelable lease and AS 19 is applicable. You understood what I am saying, sir? See, in this case, generally Mr. B cannot cancel the lease, but on happening of remote contingency, he can cancel the lease. Remote contingency means quite a rare thing, which may happen, may not happen. We don't know, which is not in our control. Suppose in this case, fire happened and destroyed. Now I can cancel the lease. So it is a non-cancelable lease because it is cancelable only upon the occurrence of some remote contingency or with the permission of the lessor. See, now suppose Mr. A is having one hotel. He has given this hotel to Mr. B as lease. Now the lease is for suppose 10 years. Now Mr. B successfully carry the hotel business for 4 years. Now after 4 years, so the losses become so huge that he doesn't want to continue the lease because the losses are so huge. Suppose if he continues now, the losses will be again accumulates and it will be beyond his reach. So he may become insolvent also. So he thought enough is enough. I don't want to continue this. So I want to cancel this lease. So Mr. B approached Mr. A and said to Mr. A, see, this is the position of my business. So I don't want to continue. Now Mr. A is also a businessman. He understood, okay, you can cancel the lease like that. So with the permission of the lessor, see, with the permission of the lessor, a lease can be cancelable. Still it is considered as non-cancelable lease and AS 19 is applicable. You can't say, sir, in this case, Mr. B approached Mr. A and said, I don't want to continue the lease, so this is cancelable lease, AS 19 is not applicable. No. So standard says a non-cancelable lease, a lease which is cancelable only with the permission of the lessor. So with the permission of the lessor, if the lease is cancelable, still it is considered as non-cancelable lease and AS 19 is applicable. See, if the lessee enters into new lease for the same or an equivalent asset with the same lessor. Sir, for example, lessee enters into lease agreement, new lease for the same or an equivalent asset with the lessor. Same asset or equivalent asset with the lessor, new lease agreement if he entered, now obviously old lease agreement is cancelled. Now, if the lessee enters into new lease for the same or an equivalent asset with the same lessor, even though the lease is cancelable, still it is considered as non-cancelable lease and AS 19 is applicable. For example, in this case, Mr. A is having one hotel in one particular place. For example, in one place called Zone X. So this is the place. Now in Zone X, Mr. A is having another hotel, Zone X. So this is hotel number 1, this is hotel number 2. Now see, Mr. B actually taken this hotel 1 in Zone X as a lease. But he thought after carrying business for some period of time, so Zone X hotel 2 is much better for his business, which is suitable to his business. So he entered a new lease with the same lessor for same or equivalent asset. This is equivalent asset. So see here, new lease agreement for the same or equivalent asset or same asset with the same lessor. Lessor is same. See, SC enters a new lease for the same or an equivalent asset. So here lessor same, asset same or equivalent, no problem. See, in place of hotel, can I take car as a lease? No. Same or equivalent asset. Lessor same. Okay, equivalent asset with the same lessor. And that too new lease. So if new lease agreement is entered with the same lessor, with the same for the same asset or equivalent asset, then also obviously old lease cancelable. No? Can I say it is cancelable lease, AS 19 is not applicable? No. It is still non-cancelable lease, AS 19 is applicable. That means what is they are trying to communicate is, see, in different circumstances. Till now 3 circumstances we have covered. In all these 3 circumstances, the original lease may be cancelled, but because of which reason, that you need to understand. So because of this particular reason, the old lease cancelable, still we have to consider it as non-cancelable lease and AS 19 is applicable. You can't say because of these reasons the lease is cancelable, so AS 19 is not applicable. No. So this is the third one. With the same lessor, same asset or equivalent asset, new lease entered agreement na, so that is also non-cancelable lease. Now, upon payment by the lessee of an additional amount such that at the inception, continuation of the lease is reasonably certain. Upon payment by the lessee of an additional amount such that at the inception, continuation of the lease is reasonably certain. Upon payment by the lessee of an additional amount. See, this is also very, very important. So, a lease is cancelable. A non-cancelable lease is a lease which is cancelable only upon payment by lessee of an additional amount, such that at the inception, continuation of the lease is reasonably certain. Suppose, see, there is a lease agreement which is cancelable only upon payment by the lessee of an additional amount, such that at the inception of the lease, the lease is reasonably certain. So, suppose the lease is originally given for 5 years. Now, once the 5 years is over, Now, upon payment by the lessee of an additional amount, if lessee pays some additional amount, so lease is cancelable. But see, at the inception of the lease, at inception means at the beginning, continuation of the lease is reasonably certain. Suppose we have given a lease for 5 years. Now, once the 5 years is over, if lessee wants to continue the lease, he can continue, he can renew the lease. Now, we know at the beginning itself that it is reasonably certain that lessee will continue the lease. Sir, reasonably certain. At the inception itself, we know, we mean, see, reasonable certainty that the lessee is going to continue the lease. Suppose, for example, Mr. A, see here, Mr. A has given a lease of this hotel to Mr. B for 5 years. Now, once 5 years is over, Mr. B can continue the lease, renew the lease. Now, we know in the beginning itself, Mr. B will certainly continue this lease, because see, hotel business is not something which is carried for only 5 years. Suppose if this business is clicked now, or if it is a already established hotel now, they will carry the business for some years together. So it is not that 1 year, 2 years they will run the show, not like that. Na? So at that, suppose for example, I am the property owner, I have one property. Now this property I have given lease to one famous hotel. For example, Minerva group of hotels. Minerva hotels. Now I know at the time of inception of the lease itself, I know that this Minerva group of hotels, they will continue their business. So they are one of the big group of hotels. So they will continue definitely for 20 years, 30 years lease period, 50 years, 100 years they will take. So therefore, if they want, they can see cancelable upon payment by the lessee of additional amount, such that at the inception continuation of the lease is reasonably certain. So if as a lessor I know in the beginning itself the lessee, there is a reasonable certainty that he will continue the lease. So even though the lease is cancelable by payment of some additional fees, still I have to consider it as a non-cancelable lease. And so that is non-cancelable lease, and AS 19 is applicable. So a non-cancelable lease is a lease that is cancelable only upon payment by the lessee of an additional amount, such that at the inception of the lease is reasonably, the continuation of the lease is reasonably certain. Now 5 years, after 5 years they will continue by payment of some additional fees. Now you can't say, sir, once 5 years is over, suppose if they have not exercised the renewal option. See, that's why they are not saying after 5 years, they are saying at the inception of the lease, if you have a reasonable certainty. In the beginning itself, if you have a reasonable certainty, see, the prudent businessman, so definitely he want to continue the business after 5 years, because the terms of the lease is favorable to him, or the nature of the business is such, once 5 years is over, he does not cancel the lease. Now if that is the case, they are saying that it is a non-cancelable lease, even though it is cancelable, even though other party may not exercise the option of renewal, but still we have to consider it as non-cancelable lease, and AS 19 is applicable. So therefore we have given a renewal option, and at the beginning itself we know that this lease is going to continue. So therefore it is cancelable if the other party will not exercise the option, but still it is considered as non-cancelable lease, and AS 19 is applicable because we are reasonably certain that this party is going to continue the lease because of the facts and circumstances. I told examples now. That's it. So first of all, why we are learning this definition? I told you this definition we are learning because AS 19 is applicable only for non-cancelable leases. For cancelable leases, this standard is not applicable. First of all, what is non-cancelable lease? A non-cancelable lease is a lease which is cancelable by 4 reasons. For any one of the 4 reasons. By on occurrence of some remote contingency. Suppose something disaster happened, some remote contingency happened, I can cancel the lease. So that means lease is cancelable, but on occurrence of some remote contingencies, so it is considered as non-cancelable lease. Next, with the permission of the lessor. See, I can cancel the lease with the permission of the lessor. So it is cancelable, but still it is considered as non-cancelable, and AS 19 is applicable. And if the lessee enters into new lease for the same or an equivalent asset with the same lessor, no problem. If the lessee enters into new lease for the same or an equivalent asset with the same lessor, then that is also non-cancelable lease. And last one is on payment of some additional amount, that at the inception of the lease there is a reasonable certainty that lessee will continue the lease. So therefore it is also non-cancelable lease. So this is definition number 2, sir. Definition number 2. What is definition number 2, sir? Non-cancelable lease. So for non-cancelable lease, AS 19 is applicable. For cancelable leases, AS 19 is not applicable. Now third definition, inception of the lease. See, just now we have learned at inception. What is inception of the lease? See, standard says inception of the lease is so the date of lease agreement and the date of commitment by the parties to the principal provisions of the lease, whichever is earlier. Important, sir, because see, inception of the lease. So from which date onwards the lease started? Inception of the lease. In so many places they use the word inception of the lease, at the inception of the lease, accounting treatment at the inception of the lease. So what is inception of lease? You need to understand. So inception of lease means the date of lease agreement. See, this is one thing, date of lease agreement, and date of commitment. What is that? Date of commitment by the parties to the principal provisions of the lease. See, the lease agreement is there na? The principal terms and conditions of the lease. So which date the parties have committed? Date of commitment by the parties to the principal provisions of the lease. And what is the date of lease agreement? So on which date they have entered into the lease agreement, date of lease agreement, and on the which date they have committed to the principal provisions of the lease. Whichever is earlier you should take. It is not the date of lease agreement. So which date officially written on the lease agreement? No. The date of the lease agreement or the date on which the parties entered into the commitment for the principal terms of the lease. So date of commitment by the parties to the principal provisions of the lease. Now whichever is earlier, that is called inception of the lease. So this is also very, very important definition. So inception of the lease. Okay. So third definition also we completed. What is inception of lease, sir? Is it a date of agreement of the lease? No. Date of agreement of the lease or the date of commitment to the principal terms of the lease. Date of commitment with the parties to the principal provisions of the lease. Whichever is earlier is inception of the lease. Whichever is earlier, remember this. Whichever is earlier. This is one word. Next, another important word is lease term, sir. Another important definition is lease term. Sir, generally what is lease term? See, for how much period we have given the asset for lease? 5 years, 6 years, 7 years, 10 years, like that. So, but standard says lease term is the non-cancelable period for which lessee has agreed to take an asset, agree to take on lease the asset together with any further period for which the lessee has the option to continue the lease of the asset with or without further payment, which option at the inception of the lease it is reasonably certain the lessee will exercise. So what is lease term? Non-cancelable period for which lessee has agreed to take the asset on lease together with any further period for which lessee has the option to continue the lease with or without further payment, which option at the inception of the lease is reasonably certain that the lessee will exercise. That means, see, lease term basically, for example, sir, for example, A has given an asset to B on lease basis for 5 years, for example. Now this 5 years is a non-cancelable period. He cannot cancel. So 5 years. So lease term is 5 years plus any further period which a lessee can exercise the option of continuation of the lease with or without payment of further payment. At the inception of the lease, it is reasonably certain that lessee will exercise the option. For example, in the lease agreement, they have written that, see, the lease term is originally 5 years. Once 5 years is over, if lessee wants to continue the lease, he can continue the lease. On payment of this amount, he can continue the lease. Renewal option is given. Now, according to AS 19, original non-cancelable period plus further period, which lessee has the option to continue the lease, and at the inception of the lease, it is reasonably certain that lessee will continue the option. Definitely he will continue the option. Non-cancelable lease definition also I said. At the inception of the lease, it is reasonably certain that lessee will continue the lease. For example, A has given the asset building, hotel building to B for 5 years. Now definitely after 5 years also this group of hotels B will continue the lease, and we have given a option, renewal option. Now after 5 years he will pay that amount, he will continue the lease. We are reasonably certain. So when it is reasonably certain that the lease will continue by the other party by payment of some additional amount or without payment of some additional amount, that further period is also part of lease term. See here, non-cancelable period, the original period for which the lease is given, which cannot be cancelled, that is part of lease period, and also further period for which lessee has the option to continue the lease asset without further payment, which option at the inception of the lease it is reasonably certain that lessee will exercise. So therefore lease term is combination of two things. What is non-cancelable period? One is non-cancelable period plus any further period which lessor has given an option to lessee to continue the lease. But remember, the lessor has given an option to lessee to continue the lease, and it is reasonably certain that lessee will continue the lease at the inception, at the beginning itself. We have reasonable certainty that he will continue. Suppose in the beginning itself we have a doubt whether he will continue or not, then further period should not be included in the lease term. So when further period will be included in the lease term? Only when there is a reasonable certainty that he will continue the lease. So that is called lease term. So lease term is combination of two things. What are those? Non-cancelable period plus any further period which can be continued by the lessee with or without further payment. So now at the inception of the lease, it is reasonably certain that he will continue the lease. So these are the 4 definitions we have discussed till now. So till now what we have discussed? We have discussed what is objective, what is scope of the standard, and we started discussing definitions. Lease, non-cancelable period, non-cancelable lease, inception of the lease, lease term.